So, as you might be knowing, there is something unexpected happening in the oil industry. Canada has started exporting oil to China, a country that it once treated as its economic and political rival. Not only that China has entered the game, but Canada is also thinking of reviving some of its important pipeline projects which were scrapped in the past due to environmental and regulatory concerns. But what does these new developments mean for the global oil market? How will it impact the oil prices? Stay with me in this video, and by the end of the video, you will know two things. First is what is exactly happening in the oil industry, and second is why it matters, like how it matters to you, how it will disrupt the global oil industry and the oil prices globally. So let's start with a recap of what exactly is happening in the oil industry. First of all, you should know that for decades, Canada's oil production, or whatever oil that Canada produced, had only one destination, that was the United States of America. That means the USA was the major export destination for Canada. This was an arrangement that seemed unshakable. Canada, sitting on one of the world's largest oil reserves in Alberta, would extract its crude and send it south to the United States of America, and the American refineries would process it. Simple and dependable. In fact, by 2023, 97% of the Canadian crude oil was exported to the United States of America. Pipeline projects like the Energy East and the Northern Gateway that could have opened new markets for exports for Canada were proposed, debated, and then finally abandoned, owing mainly to the regulatory and environmental approvals and concerns in Canada. These were never approved.
Dozens of protesters, both anti-pipeline and pro-Indigenous rights, pushed their way past security and occupied Ottawa's Old City Hall to protest a pipeline.
So all these things like the complacency, the regulatory and the environmental concerns and the approvals in Canada kept Canada entirely dependent on the United States of America for its exports. Then in May of 2024, something changed. The Trans Mountain Pipeline project expansion was completed, which unlocked new export routes to the Canadian market. For those who do not know, the Trans Mountain Pipeline project is a major pipeline in Canada which transports crude oil and other refined products from Edmonton, Alberta to British Columbia in Canada. So this system has been a crucial piece for the Canadian oil infrastructure, which ensured that oil can be transported from the interior parts of Canada to its western ports, from where it can be shipped to different countries. So the expansion of the Trans Mountain Pipeline project, the expansion project which was completed in May of 2024, this was to build a parallel pipeline to the existing one in Trans Mountain Pipeline, which could actually increase the transportation of crude oil from the interior of the country to the ports.
The Trans Mountain Expansion Project is a very large project that spans two provinces in Western Canada. It's 1,150 kilometer long pipeline, and there's a tank terminal in Edmonton, there's a tank terminal in Burnaby, and there's offshore facilities to load vessels. And
so this expansion project significantly increased Canada's ability to transport oil to the global markets. In fact, this expansion actually tripled the volume of oil that could be transported from 3 lakh barrels per day to about 8,90,000 barrels per day. So initially the analysts assumed that it would increase the amount of oil, the volume of oil that is exported to the US. But then something shocking happened and China entered the game. With the looming tariff threats from the US hanging over the Canadian exports, oil producers in Canada started to diversify the market where they can sell their oil. And in this diversification, one country stood out, which is China, one of the largest importers of oil oil in the world. So it is the largest importer of crude oil globally, and Canada found China as one of its biggest alternative to United States of America for exporting crude oil. So this was the first time when large shipments of Canadian crude oil started flowing to the Chinese refineries, bypassing the United States. In just 6 months, from May 2024 to November 2024, China purchased $2.03 billion worth of Canadian crude. A country which once barely imported any crude from Canada is now one of its major customers for the crude oil. So, what does this mean? Is Canada breaking free from the US, or is it just the beginning of a new alliance between China and Canada? And how will this impact the global oil prices? Let's break it down. For over a century, I would say that Canada's energy trade was quite predictable. Oil flowed south to the US, and the US controlled the oil prices. Although Canada was the fourth largest oil producer in the world, it lacked the leverage because 97%, almost 97% of the oil was exported to just United States of America. But now Canada is looking for options. It is now looking for new markets to export its oil and emerge as a global oil exporter. So this shift can actually challenge the US dominance over the Canadian oil and open new doors for the Canadian oil exports. If Canada continues to ramp up its exports to China and also other Asian markets, it could reduce its dependence on the US. It could gain strong political bargaining power and even expand to other growing economies and bigger markets like India. So China, on the other hand, gets a reliable and stable and long-term partner for its oil demands, one that is not burdened by the US sanctions and the Middle East uncertainties. So if this trend continues, we could witness a new energy bloc forming, one where countries like China, India and Canada could create a counterbalance to the United States of America and Middle Eastern energy dominance. So China has long relied mostly on the Middle Eastern oil for all its oil demands. But this route of oil or this partner of oil for China has one concern. The oil has to pass through the Strait of Hormuz and the Malacca Strait, two of the most geopolitically fragile trade routes in the world. With the US military pressures in these waters and growing tension in the South China Sea, China faces the constant threat of supply chain disruptions if the oil comes via these routes. So that's where Canada comes in. By securing stable oil supply from the Canadian Pacific coasts, China could actually get reliable oil trade partner which is not as vulnerable as the other routes of oil for China. So for China, this is not only about oil, it is about the energy security that China gets from Canada in this increasingly uncertain world. So while China and Canada can celebrate this trade partnership, one country for sure will not be happy with this partnership. That is, of course, the United States of America, USA. For decades, the US had the privilege of buying Canadian oil at a discounted rate, a luxury that might soon disappear for USA. So if Canada continues exporting oil to China, the US could even face higher oil prices, weaker energy influence over the world, and rising tensions with its northern neighbor. So could this lead to a trade war? That remains to be seen. So Canada's new oil exports are not just a political move, they would impact the price of oil globally. So with more Canadian crude entering the Indo-Pacific market like China and Japan, that is happening right now, and once it also ramps up, the Middle Eastern oil suppliers like Russia, Saudi Arabia, they would face the competition in oil exports. So, with this increasing competition in the oil in the Indo Pacific region and globally also, but let's say for the Indo Pacific region, the rising competition will make the oil prices to fall. So, remember, these are just assumptions. I mean, there are several variable items in play. Many things can happen, many variable things can happen, but these are projections based on what we consider as the most probable things or sequence of events that are going to happen. So this could push the prices down, forcing the OPEC countries to adjust the production to maintain the oil prices in the market. How does this affect you? So well, if the oil supply increases, the oil will become cheaper for you in Asia, for China, for India and its neighbors. But if the OPEC countries cuts down in the production of the oil to stabilize the prices of the oil, then it could drive the oil prices higher or it can stay at the same level. So in short, the ripple effect of the Canadian shift to China for its oil exports can be seen worldwide. It would affect you sitting in India, you sitting in Canada, you sitting in US or China. In conclusion, we can say that the Canada's shift to China, the trade shift to China, the trade deal that it is doing with China, it is not just a trade deal, it is a power shift. It is a move that could redefine the global energy markets, alter political alliances, and set the stage for a new world order in oil. What happens next, that depends on how the world responds. So, will the US fight to maintain its grip on the Canadian oil? How will it happen? Will Canada and US negotiate further on the tariffs so that Canada still exports majority of its oil to US and not focus on China? These are some of the questions that we will see in the coming days or the coming months, and I'll try to update you with all these things happening as they occur. So if you found this video insightful, don't forget to like, subscribe, and let us know in the comments, is Canada doing the right move here? Thanks till then, have a good day.